I'm very pleased to be here in this audience on a subject that I know a lot about, but I know nothing about superannuation and trustees and any of that. I've got a dim understanding through my own superannuation fund. That's about it. I'm going to hopefully completely bamboozle you with what the Internet of Things is. My presentation is seizing the Internet of Things opportunity for Australia, and there are a number of really important messages inside that. One is that the Internet of Things will create and can create an amazing opportunity for growth and transformation, and that Australia is at a threshold of whether it takes on that challenge or not. The second thing is that this transformation is going to happen to us one way or another, whether we like it or not, and across absolutely everything we do. And I don't mean industry, I don't just mean business, I mean community, I mean citizens, in the sort of way that the internet did that we had no idea about, and that happened in the 90s, and it took 10 years to happen. And I think Australia is something that is high on my agenda, and that's why we created this thing called the Internet of Things Alliance, and I'll give you one little message later on about why we created it, and it's quite a compelling one. So let me first reiterate that first major point. The Internet of Things will literally affect everything. It'll affect how we sustain our environment, how we improve our productivity, which is the thing that everyone keeps talking about industrial internet. It will do something about empowering our citizens that the internet did. And imagine before the internet, we didn't know where to look for data except in maybe the local newspaper or to the library. And a little vignette that I got from a co-founder of a law company called Gilbert & Tobin told me a few years ago that for the first time ever in 2013 and 14, the number of global billable minutes for the legal profession went down. That's like staggering. I thought, well, how could that be? There's not like there aren't any more cases, there are a lot more people, and that's because the structure of the legal profession, which is partner with sub-partner and researchers, was disintermediated by the internet, and the researchers disappeared. So that's because we can now do it differently. So imagine that sort of change. Internet, legal, how could that be? It be. So, and herein lies the innovating services. It creates opportunities that we didn't even know existed. And the legal profession didn't see that coming. But there are other subgroups that have now created their own capability because of what they can do through the internet. Now, a very simplistic diagram of what's the difference between the internet and the Internet of Things. So the internet is pretty much connecting computers with people, phones with people, people with people. It's about people. The Internet of Things is about connecting things. And I mean the glass or the chair or a wearable or a machine or the air quality or the noise. It's basically translating the physical environment into a digital one. So we have digital awareness in a way that we had about information in the internet age. Now it's about where we are, the environment within which we sit, the environment in which the services that we produce and the actions that we take sit. So that will be utterly transformational. In 20 years time, everyone will say, I don't know how you lived. That's as big as it's going to be. So let me explain very, very briefly what it is. And it's not just about the devices, but it's about translating physical into digital. Absolutely, and that's lots and lots and lots of little things. Our chair of our board is from a company called Bosch. It's a small $120 billion company. It makes millions and millions of about 1 millimetre by 1 millimetre things. And the only reason it's that big is because you have to connect it to something, and you need a connector. And so you need to have a little physical something that you can solder. So they make a lot. But it's the data that it produces and how we move it around that really unlocks the power and the potential. So this collecting and transforming of the data and the sharing is the guts of what the Internet of Things will be about. And when we talk about data, you will have heard about things like big data. And big data, I love big data, but I also hate big data because for me, sometimes it's a bit like a needle in a haystack thing. I've got a lot of data. I'm just going to keep pumping intelligence into there until I find a needle in that haystack. The Internet of Things takes it slightly differently. It says, what is the data you need? If you've got it, great. If you don't, get it. Either get it yourself by putting out sensors or get it from somebody else. So it's about generating the data you need to to deal with the problem that you have. So quite a different way of doing it, and now the cost structures are allowing us to do that. It is obviously about providing analytics and then understanding. That won't happen unless we share the data, and there are many data silos out there, even within companies and particularly across industries. And that boundarylessness of the flow of data are the things that will be changing industry models. And then finally, it's the feeding back of that data in a presumptive and even automated way to start to creating positive loops for improvement or insight or behaviour that will start changing. And a classic example for me is the Fitbit. Now and we talked about precision in some other meeting I was at, and I love the word precision because I'm an engineer. And Fitbits are nothing if they're not precise. They're not even close to accurate. They may be 20% accurate when it looks to counting steps. And yet, when my wife received a Fitbit from her daughter, and she didn't want it, it changed her behaviour. It didn't have anything to do with how accurate it was. It didn't have anything to do with anything other than visibility, and it changed behaviour. Visibility, data, changes behaviour. What interesting concept. That's what the Internet of Things is about. Now, you may have heard something called Industry 4.0, and I wanted to introduce that briefly. The Prime Minister has a task force called Industry 4.0. That is a subset of the Internet of Things. It is a highly thought through instantiation that is happening in Germany right now around manufacturing, about mass customisation, very nimble, very high quality, integrated with freight logistics type delivery of manufactured goods. We're a heck of a long way away from that. The important thing is to remember that manufacturing is a part of every other vertical. So in food and ag in Australia, we're one of the world's leaders. We have safe food. 20% of food and ag is manufacturing. So these things all work together, and if we start connecting the manufacturing and the processing and the logistics with the making of the food, we start changing things. Let me give you an example. Horticulture. Farmers grow lettuces. Harvesting the lettuce at the optimal time for when it's at the right level of moisture gives its maximum shelf life time in Woolies. The guys at Woolies don't know that. Or they might know that, but they haven't got the data to know when to pull it. So they just pull it when there's a gap in the shelf. So what happens is we get a lot of people pulling the wrong lettuce from the wrong place, and the customer gets half the shelf life. And that means they get a bad product and the farmer gets paid less money. That is a case of not sharing data that can be made available. Here's a case of three verticals in the same place. It's about farming, it's about logistics, it's about processing and bagging the lettuce, and it's about retail. Wow. And you might even be able to tell the shopper that this has got this much lifespan on your lettuce instead of finding out that it wilts after 2 days in the fridge. Why is it all different? Because we've been doing SCADA and sensing and stuff for a long time, and the reason is utterly dramatic change in cost of the sensors, the bandwidth to deliver the data over networks, the capability of processing, and the data storage. So the CIOs will know this well. In 1985, it was $250,000 for 1 gig to store a gig of data. And 10 years later, it was about 30,000, and 10 years later it was about 3,000, and today it's nil. You can get 1 gig of data from 15 vendors for nil. That's the cost. Now, might need a bit more than that for all the data we're going to collect, but that shows why it's changing, that the business cases are changing. How big is it going to be? Pretty hard to predict. Our chair confidently predicts that it will be around $1 quadrillion in umpteenth years. But we nevertheless go to people who are more intelligent than us, And McKinsey's, interpolated for the Australian conditions, predict there's about $45 to $120 billion of added value to the economy through the use of Internet of Things. And by the way, most of that's nothing to do with the sensors and nothing to do with the data platforms, which is about 15% of that. And that's in the efficiency gains and the value add and in the changed business models that come out of the application, and indeed in changing the boundaries between industries. So this is the magic that can come out of it. It means that well, let me not go there yet. Let me give you a few examples of a change in collecting data that actually changes business models, which actually changes opportunity and it changes value. Brambles is a classic case. They got a big division called CHEP. They do about 500 million pallets. They lose about a quarter a year, apparently. I'm not sure I completely believe that, but that's what I was told. That's a lot of pallets. But they've started now sensing the pallets. Now, sensing the pallets is great. They don't just measure where they are now. They measure whether they've been dropped, or whether they've been put under water, or whether they've been cooked. Now they don't have a pallet service anymore. Now they've got a delivery service that has a quality of service around it that allows them to measure the carriers along the way. So all of a sudden, their business model is changing with their partners who are deliverers, with their end customer, which is the service quality they provide them, and indeed from an asset management point of view, so they can actually look at their wastage. So that's a transformational thing that you can do just by sensing. Incredible. Now, I've only scratched the surface. I love this model. This is an Australian company called The Yield, and they are providing a service to the oyster industry. Here, the Internet of Things in the oyster industry. What is that? How could that be? Well, another case of data being used for multiple purposes. The same data's for the oyster farmers, and data for the regulators. Oysters are filter-feeding organisms. They live in saltwater environments, but they're in estuaries around Pambula or whatever, a lot in Tasmania. Now, when it rains, the rain comes along, the water becomes less saline, and nutrients will come down, and that becomes a potentially unsafe environment for oysters. So how is that managed and controlled by them? Well, it's not. It's controlled by the regulator. The regulator looks at BOM data, and it says, okay, it looks like it's going to rain. I think you should pull the oysters out because it's going to take this long to get there and start affecting your oysters. And so they pull it out, pull all the oysters out. They hire staff, they pull the oysters out, and they leave it out until the regulator says, put them back down again. Now, that BOM data is often mostly from catchment areas 100 kilometres away. The estuaries some are steep, some are long, so it could take 2 or 3 or 4 days before it gets into where the oysters are. What's the solution? Salinity sensors, where the oysters are. High quality, reliable, battery operated. Now you have a proxy for whether there's salinity there or not, whether there's impurities or not. The result is, on average, 30 days more oyster growing time, and for the larger oyster farmers, $30,000 a day better return. Now, the service cost for that, $60 a month per oyster farmer. Now, there's a business case, same data. The regulator now has certainty and has the same information that the oyster farmer has, both on some app, where they can actually see, time to pull up or not. That app is then often connected to a workflow, which is where they can order staff to go and pull things out. So, very, very simple case, a transformative case that helps profit with not a large investment because they have data. Driverless cars, I don't want to talk too much about that, but suffice to say the change in understanding of where cars are, how cars are used, completely is transforming the insurance industry. It is completely transforming the driving or driverlessness of these cars. So no longer will insurance premiums be paid out just on whether you have a bingle, but it'll be, has it been in the garage, or how many kilometres have you driven, or do you drive it well? Do you accelerate too much? Is it used by many people? All those things will be data points that will be naturally collected, whether they're in the car or not. Now, that is today already affecting the way in which premiums are sold. Insurance products, I think I won't go there. I want to just move on to a couple of other points that are important. Security is extremely important, and having a lot of data out there is an issue. The protection of that data will be fundamental in terms of managing it for your investment companies, for your own companies. So protecting is vital, and trust in the product use is vital. Otherwise, this won't work. Our ambition for the Internet of Things Alliance Australia is to introduce IoT security marks for products in the country. It's not happened for the internet. It's not happened anywhere in the world. But if we can actually get a reputation in Australia for not just having safe food, but having secure services, how transformational could that be? Amazing. We might run up to a bit of flack on the way. Now, this is the driver for change. The driver for change is this, that we are not as smart as we think we are in Australia. We've consistently, in the last 3 or 4 years, gone backwards in our World Competitiveness Index, and last year from 21 to 22. And the killer is, on the 12 measures they have, there are 12 macro measures, the 3 that we're going backwards on is business sophistication, business innovation, and technological readiness. Now that is an indictment on a smart country that invents a lot. And we do invent a lot because Innovation and Science Australia have basically reviewed our performance against our 22 peers, and we are 4th on creating content, creating knowledge. We're middle in terms of sharing it, and we are last in adopting it. So, Internet of Things, capability, knowledge, this is a transformational thing. Australia is unbelievably lucky in the wealth that we have and the education we have. We've got to actually start transforming our businesses, or they will be transformed. And whether they're transformed internally or externally, they will affect the risks around the companies that you will be investing in. The Internet of Things Alliance, we're a collaboration of collaborations. So we have over 300 companies within us now. In fact, 330. We're growing at over 5% per month. We have 7 work streams that work with government, work with research, and work within the focus sectors that we are choosing for favouring Australia's natural advantage. So water, transport, electricity, food and ag, and cities. The great news is that it's not just technology companies anymore. Commonwealth Bank, IAG, freight and logistics companies are now part of this exercise. We have research, governments involved, Prime Minister and Cabinet, Department of Communications, etc. It's a transformational thing for the country. We work on 7 different work streams, building a collaborative environment, so knowing who's who in the zoo, sectoral focus that runs those 5 that I mentioned. For me, the big one is data sharing and privacy. So the data sharing thing, there's no point collecting the data and keeping it for yourself. There's no point trying to collect data that someone else has got when it's easy to get it from someone else. It's understanding the principles around which and how you share. I've got 1 minute. I'll give you a case. There's a city council in Australia. They've got an open data platform, 19 pages of legal documents to put a data set on. Guess what? No data sets. Another one in Adelaide, 2 pages, plenty of data sets. So it's about understanding risk, it's understanding data sharing and principles of privacy. And I've just done a really rapid breakneck speed view of the Internet of Things. It will change us all. We're a massively fast-growing organisation. We'd love to know more about what the superannuation industry can get out of it. And I do believe that understanding data better about the companies you're investing in is key. I learned about factors today, and that's all about data in my mind. So thank you very much. I hope it was interesting and useful.
Thank you, Frank. Please welcome Gary.
That was good. The Internet of Things is so powerful, and Frank, thanks for that. I think the best thing I learned, actually one of the more useful things for me, was that, I don't know if you guys caught it, but Fitbit has a 20% error rate, which I am very thrilled to hear that, because I know I'm walking more, I'm running more, I tell my wife that, so I'm feeling good about that 20% error rate is an actual number. So my name's Gary Chropuvka. I've been fortunate enough to be at Goldman Sachs Asset Management for my 20th year now, and we are big data investors. So what I'd like to do now is really accomplish 2 things. One is to give you a sense of this data revolution that's taking place. And second, to provide you actual examples of how people can utilize this to create what we all are in search of in our everyday lives, which is an informational advantage. We all want to make better decisions. We all want to have an informational advantage. So I think Ali had the question up there before, which was, I think it was 81% of you said that the amount of data out there that's been created in the last few years is between 80 and 90%. For those of you who said that, you are obviously right. 90% of the world's data has been created in the last few years. That's astonishing, but it really shouldn't be all that astonishing because you are all in this room contributing to that. All of our lives are all electronic. They're all digitized, many, if not all, of our conversations. In the hour that we have this session, 34,000 web pages are being created, 144 million Google searches are being created, 8.5 billion emails. I hope none of you are sending an email and contributing to that 8.5 billion number in this hour, and about 22,000 tweets, which, as an American, I'm hopeful that our president is not sending out any of those 22,000 tweets this hour. But we're all contributing to this big data revolution. Now, we're all using data also, right? Data is great, it's out there, and Frank mentioned the needle in the haystack. We think it's much more than that. There are many needles, I don't know the right analogy, but that data has the ability to really allow all of us to make more informed decisions. Whether we're buying a house or an apartment, it's not just looking at the four walls of that apartment. It's not the kitchen, the family room, right? We're thinking about what else is going on around that house. What are the crime rates? What are the trend in prices? What are the educational facilities they have? What are the recreational facilities for the kids, right? Who are your neighbors? You're able to find out information about your neighbors, right? It's not just about what goes on in the four walls of that apartment or that house, but also what goes on around. That's becoming more and more important for all of you and all of us to be able to make more informed decisions. When we think about companies, it's exactly the same way. It's not just about what's going on within the four walls of a company. It's not all about what's going on in their balance sheet or income statement. It's going around what are they associated with. And that is of critical importance. And so the interesting part of big data is that 90% of the world's data is created in the last couple of years. The more interesting stat is that only 2%, it's actually less than 2%, is actually being analyzed. That's the power. So with that, what's the ability to adapt? Right? We all talk about adaptation and how we can drive value. How can we be smarter? Right? Not just do our jobs, but do our jobs better. Well, we try to break it down into three ways. One is human attention. I got to tell you, I don't know about you, my to-do list, I just talked to someone earlier, their to-do list is not shrinking, but rather growing. Right? When I first got into this industry, they said the more you do, the more you can do. Well, truth is, human attention is not going flying up. So secondly is structured data, right? How many Excel spreadsheets can we possibly put together, right? We can get more data, we can create macros that help us analyze some of that data, but that's ascending at an interesting pace. But really where we see the value is this concept of unstructured data. Right? What are we doing with text, with voice, with images, right, to help us? Frank mentioned it on the Internet of Things, right? When you're thinking about companies, there's so much out there on text that people can analyze. Think about the 1.3 billion pages of annual reports for the 13,000 developed companies, public companies that are investable out there. That's a lot of data. We believe that the ability to systematically understand and incorporate this into portfolio management and looking at equities is of critical importance to keep an edge in this whole idea of active management. So, as big data investors, how do we think about stocks, right? So we have a lot of analytical capabilities. Frank mentioned kind of the process, right? How do you acquire data? How do you analyze data? We have a lot of capabilities to be able to do that. How do we capture the enormous amount of interesting data about a company? Well, there's really four things that we do. One is we want to look at the quality of a company, right? We want to look at companies that are growing. And we could wait for financial statements, or we can utilize things like credit card data or web traffic. We always want to find out how cheap a company is by looking at their valuation, but we don't necessarily have to rely on something that was out last quarter. We can look at things like, for REITs, look at property values and look at how those economies are doing to get a more measurable way of looking at the current and the future as opposed to strictly the past. And the other two really important pieces that big data has helped us with is thinking about trends and themes, right? What are the trends that companies are associated with? What are the themes that are out there that is causing attention around the globe? And the last is around sentiment. What are analysts saying about it? What is company management saying about their own company, right? So we utilize techniques like web traffic and natural language processing to be able to get a better understanding of a company's fortunes. Successful active management has always, whether it's a quantitative approach or a fundamental approach, about identifying and interpreting information before the market does. And that's what big data helps us do. So how do we do this, right? We read 10,000 news articles each and every day, right? We've got a library of 26 million articles. We read through massive amounts of analyst research reports. We think about earnings call transcripts and understand what company management is saying about their specific company. And of course, looking at web traffic, right? Such a critical component. All of these are unstructured data, right? Virtually impossible to do this by one analyst. And so the need for computers and analytical skill sets married with practitioner insights, we think is so powerful. Last year alone, Apple had about 27,000 articles written on it. Facebook had 20,000 articles. How can you possibly, as an analyst, digest all of that data or information? So what I want to do now in the next few minutes, just go through 3 examples. And how do we identify relationships of companies that others may not be able to pick up? There's simple relationships like customers and suppliers, competitors, but what about ones that are less obvious? So you can think about Twitter has all these trending topics. Well, other things that we want to know about are, I'll give you an example, what topics are trending in terms of industries and how is that affecting stocks? And you can think about casino and gaming as one particular sub-industry and home entertainment software. And you say, all right, these are two very, very different industries. They have very different customers, very different competitor landscape, but they're exposed to some very similar themes. Themes like virtual, mobile, social, online. Both of those sub-industries were up 50% this year, right? So even though they have different focuses as businesses, they are connected to a particular theme. And that's what we try to do with big data, connect the dots of where the intersection of data and information is. We think that's really, really important. So the next example is understanding a company's fortunes is to review what sell-side analysts do. We all know sell-side analysts do 3 primary things. They have a price target, they have a recommendation, they like it, it's going to outperform, it's going to underperform, and they do a tremendous amount of writing. And what you see here is an analyst talking about having some positive things to say about a company, some negative things to say about a company, unsustainable, slight slowdown. And then as they start to write more and get more information, that was in March, in June, they're starting to write more favorably. And then lo and behold, in July, they pick up and they actually issue a price target increase. So if you can understand the sentiment about how they're starting to change their opinion, they are much more likely to change their wording before they go out and issue a price target increase or a recommendation change. So if we can forecast that, we can be successful in predicting price returns. Now, if we think back 10 years ago, this was an anomaly that you could just look at an analyst increase and you could put a trade on or an investment on and it would work very, very well. Now, that is now in academic papers. a lot of people have employed those strategies. They've become very, very crowded. And so you've really got to push yourself to now adapt to looking at things like natural language processing and read the actual text. What is the sentiment that analyst is trying to tell us? Right? They spend a lot of time thinking about what to write. And so why not read that and interpret where they're going with that, with the expectation that at some point in the future, there will be an upgrade or a downgrade to a particular company. And if we can do this across thousands and thousands of companies, it creates an edge. So the last example I wanted to talk about was around web traffic and sentiment. I should say sentiment is important, but fundamental growing of earnings is really important. Right? How is that company doing? This was a home improvement retailer that what we're trying to graph here is the price in dark blue and the amount of web traffic in green for a particular company, as an example. And so what you see here is back in early 2015, a lot of consumers were starting to do more work on their own homes. And so what you saw was an increase in web traffic on people's sites, whether it was Lowe's or Home Depot. You saw an increase in web traffic, right? But interestingly, what you didn't see is a pickup in returns. So there was an amount of time where web traffic was increasing, but it was not reflected in prices of that company. So again, we want to do two things when we have this type of data. One is see if it's predictive of some type of revenue increase, right? That's really important. Does it predict something that we believe is economically intuitive? And the second thing is, can you capitalize on it and make money from it? So there was a period of time of a few months that you had a particular piece of information that was not reflected in prices. This is really the power of big data. For years, quants, and you said you just heard the word factors, right? One of the big differences with quants to traditional investors is not that we do many things differently than them, but rather that we quantify what we believe about something and we write it down in an equation. Right? We both have investment insights. Traditional managers have enormous insights. As quants, we just write it down in an equation. We're the most transparent investors in the world. Why? Because we write down what we believe about something and what we don't believe about something. And so this is an example of the ability to predict something and actually having that information that's not yet reflected in prices. We also do this with things like credit card data. And so I mentioned for years, quants, we always played the breadth game. We always looked at 13,000 companies and analyzed them every day. Now with big data, we're able to play the depth game. We get more comprehensive information about a company, and we could do it in more real time. That's the power of big data. So what do you need to do this? I think Frank alluded to a few things. One is an understanding of data, understanding of the science of how to take data and do things with it. The second is an analytical platform to be able to do that. The third, which is so critical to success, is practitioner insights. You've got to ask the right questions. You have to be cynical. You have to be skeptical. Right? This stuff has to make sense to us. We need things to be causation, not just correlation. You get in a lot of trouble when you just think about correlation as opposed to causation. Does this fundamental idea capture something that we believe will work going forward? And the last, which I think people in this industry are struggling with, is the ability to have a platform where it's a culture of collaboration, where you understand you're okay adapting. And this might allude to some of the thoughts that Frank had when he talked about what's going on in Australia, is the ability to collaborate and listen and adapt and learn with what's going on in this industry, because big data is not going away. The ability to harness it, create an informational advantage, and drive returns for our clients is what we're trying to accomplish. So with that, we'll turn it over to questions.
Gary. You can, of course, submit your questions via the app, or we'll also take them from the floor a little later. Can I just start by sort of getting the elephant in the room out of the way, which was also one of the very first questions that came through. You talked about it briefly, Frank, the issue of security and privacy. Gary, particularly for you, because you're mining so much information, how big an issue is it, and where are you getting this information from?
Yeah, well, you said the one word that kind of makes me cringe, which is mining, because we really don't try to mine data. We try to utilize it, but we have. But the concept of data and security is a really important one, and privacy. And so when we do collect data, whether it's through vendors, we ensure that each of those vendors, not so much what we can use their data, but rather that they can use the data that's allocated to them. So we have very strict legal compliance. Every time we acquire data, we are going through those types of processes to make sure that we are allowed to have that data and the vendor is allowed to have that data. But I do think it will continue to be a bigger and bigger issue around privacy, but we all are contributing to this. It's being used, and I think you can either adapt to utilizing it or kind of left behind.
Frank, does it concern you?
Yeah, I think that it concerns me definitely, especially with consumers. The users out there, they're worried about it. I have two views. One is that businesses have a natural advantage over government in managing data. I'll give you this. Because consumers give their data willingly away by ticking that box. Whether they understand the box or not, they give their data away.
There is that fantastic story about the company that put out the 300-page terms and conditions, and if you actually got to the end of it, you won $500,000 or whatever it was. You just had to get to the end of it, and no one did.
No, indeed. And so there's that, and then where the bargain with the government is that you are forced to give the data, and they're protecting it way more. So first of all, you have a two-speed thing where government protects data way more than business, because the businesses have data you've freely given away, even though you did not understand the bargain that you made when you did it. So there's an issue there. I also don't think it's going to stop the Internet of Things at all, mainly because it's a bit like the car industry. We were happy enough for people to just get killed with cars, and eventually we started putting in speed limits and everything else. And we've sort of managed to hit this place in the market right now where 2,000 deaths a year is good. We could reduce that to nil if we thought that was worthwhile, but from an industry point of view, it doesn't make sense. So I think that we're going to live with it, but recently there's legislation on data breach notification, so companies will be massively fined and outed if they release data that is supposed to be secure, so there's an issue there for protection. And I think that there are going to be some well-publicised breaches also around personal things like toys and whatever. So there's going to be a move on that. So watch this space. I also think it's a reputational thing. So if we can build a reputation, then I think there actually is a market advantage if it can be demonstrated. And that's not just by saying it and proselytising it, it's somehow demonstrating it. And we haven't got there yet.
Gary, let's look at the use of big data for your investment decisions, if you like. I know that you would argue, and indeed you can demonstrate, that you've had good returns using big data, but it hasn't always been that way. You just touched very briefly on the quant crash of 2007, which I did read was one of the most humbling experiences of your life, but just what the lessons were out of that.
Sure, definitely one of the more humbling experiences. But I think this was kind of pre this big data revolution. There were two big issues in 2007. There was a crowding issue where everybody was into the same trades. That's usually it works really well until it doesn't. And the second was there was just an enormous amount of leverage in the system. And so what happens when all of a sudden returns start to go down and you have borrowed money and someone that you borrowed it from wants money back, you need to go out and start closing down those positions. So I think the lessons learned, those were the two issues. The lessons learned was at least for us as an organization, was to really try to adapt to what's going on now with data. Think about factors. Back then, 2007, we probably had 10 to 15 ways to choose characteristics of a company. Now we have well over 150 different ways, again, utilizing big data to help differentiate ourselves. We take great comfort that the correlations of active managers, at least quant managers, has gone down over the last decade because we believe there's so much more differentiation that one can have because of the massive amount of data that's out there. So, it's certainly humbling, but I think the lessons learned were important, and I think we've got a pretty strong report card over the last 8-9 years of being able to do that.
But that brings me to another question. I take your point about greater diversity, but how do you know when a trading signal, one of your 150 or whatever it is, has stopped working?
Yeah. So there's a couple different ways that one can assess that. One is a little bit more subjective, the other is much more objective. So subjective is, going to conferences, seeing academic literature, saying that more and more people are talking about that. That's good for some period of time, but again, you really want to be cautious and be mindful that, it's out there in the press, it's not proprietary, and so you want to be wary of that. The second is you can empirically look at how it's been doing. And so what I mean by that is, if a factor 3 years ago took 6 months to realize, and all of a sudden it's taking a day or 2 days, meaning that anomaly is being priced into the market very, very quickly, that's a sign of crowding. And the example we use around analyst sentiment, when analysts tend to upgrade a price target or recommendation change, that's reflected in prices within minutes, hours, or days. If we think back 10, 15 years ago, it would be 3 to 6 months. So that's an empirical way of doing that. And then also this constant skepticism of, does the economic foundations of why we believe this factor will work going forward? Is there anything structural that may have changed? So.
Take some questions from the floor now. Of course, there are some roving mics as well if you wish to put your hand up. But just one here that has got quite a few likes. How concerned should we be about the quality of unstructured data produced that's being mined to provide big data insights? But the core point there being quality of data. Absolutely.
Quality of data is so critical to success. And so, and I think Frank would probably, would I believe agree with this point. Data in itself is absolutely useless. Data in itself is useless. But when used with practitioner insights and an understanding of how that data is captured, what is the timeliness of that data, that is critically important. And so I agree, garbage in is garbage out. We all have heard that. But it really is important for success is to understand that data, understand when it comes in, when it doesn't come in, why it didn't come in. And really understanding that is crucial to success in this landscape. It's a very good question and a very important one. Hopefully you wouldn't disagree with me.
No, I completely agree. And I would say that there's a tendency for people to overemphasize the analysis and underplay the data. And frankly, it should be the other way around. It's the curation and the management of the data, and the accuracy is way more important.
Frank, there's a question here. This is interesting because you raised the point about often it seems like a needle in a haystack when you're dealing with big data. There are oceans of data, islands of information, but only rare insights. What advice do you have for us not to drown in data?
Well, for me, it's always been problem-driven. If you start from the thing you're looking for, then you can start attributing the data that you need to find that.
So give me an example.
For me, the example was the oyster farming. How can I reduce my time out of the water? Now, then you look for the data that says, this is the thing, and it wasn't available. If you want to, it happens, I think, I'm sort of imagining, but I don't know. In superannuation industry, a lot of that data may be already around, maybe unstructured or otherwise. I do think that you have to keep going back, always to the problem, always to the problem, always to the problem, and look for the anomaly.
But that's not what you do, is it, really?
No, I think it's very consistent. There's a couple of ways within the quant industry that people take this. One is the filtering approach, which I think you run into a lot of issues if you're just putting equations down and filtering on data and seeing what works. That's one approach. and people have used it successfully, but I would say that's certainly not our approach. We really want to have a foundation of economic intuition, economic insights, that it's grounded on fundamentals, and the data simply empirically backs that thesis or that anomaly that we can capitalize on. So I do believe that there is consistent. Obviously, we can't go and say, oh, let's create all that data if it's not available, but to the extent it is available, we want to really have that grounded in economic intuition, as opposed to the filtering of saying, oh yeah, this weird correlation worked and it worked for the last 15 years, so it's got to work next year. That's not something that we think is prudent.
Yeah, I've got a feeling that the velocity of the sharing of the data will increase. So I think that what you call factors are going to break down more quickly because of it.
But actually, we've got a question on that from the audience, where the question being posed is, isn't data undervalued in current valuation models? Are companies disincentivised to share data because of IP and profit-sharing models? I mean, is there a disincentive built into the system to share, to do more collaboration, as you were talking about, Frank?
Well, I think the superannuation industry may be different to just industry, but for me, the sharing of data is the key to open up new industries. It will break down old industries. So I think incumbents will want to hold on to their data. That is the behaviour. But when you start connecting, so in the food chain, for example, there are a whole lot of bilateral arrangements between suppliers and farmers and processors and retailers that have been built over years. But the sharing of data will actually open up that capability. So they will resist all the way. But the people who then start sharing will break open that market. But
Gary, you don't share either, do you? And why should you, I suppose? I mean, it's your analytics.
No, but I mean, the data that we utilize is public, right? It's got to be public data. And so it's just a matter of, what your intellectual capital is. But listen, data is, it allows us to make more informed decisions. It allows those companies, think about what types of roles companies are hiring these days. No matter what industry it's out there, is somebody that looks at data analytics, whether it's a marketing person. Now they're looking for statistics backgrounds and people that can deal with data and analyze data. Why? Because data allows you to make more informed decisions. So I do believe more and more people will open up their data because, again, they want feedback on how they can improve either their company, their performance, or their lives, their efficiency. It's really powerful, put in the right hands. And so, do we share equations? No, but do we have public data that's out there? Absolutely.
We've only got a minute or so left, but let's take a question from the floor down there.
Thank you, gentlemen. My question is around the seeding of false data into big data, and particularly when we start analysis with automated tools, how are we going to ensure the integrity of the data that we're analysing and that we're looking at? Particularly, there's now a lot of discussion around cyber terrorism based on this and cyber fraud based on this.
Yeah, I'll take a shot at it. I think what we do is, we get tens of millions of pieces of data each day into our systems, and we have, we've codified in terms of what are the differences that we're looking for. So each and every day we are looking for, changes relative to each company, each piece of data that company provides, and also relative to other companies. It has to pass, certain empirical tests for us in terms of the quality of that data. We look at it every single day. So if they're starting to do some changes to that data, we observe that, it kicks out. We've got a lot of processes to be able to ensure that. It goes back to that earlier question that you want to make sure the data is as useful as possible. At the end of the day, fraudulent activities, is an extreme. If they're doing it sporadically, that's probably a lot easier to catch than someone that, starts a company and then is just fraudulent the whole time through. I wish there was an easy answer for that, but, we do look, relative to other companies as well as to the company itself. But, you're raising an important point, and we believe we've got a fair amount of procedures and checks and exceptions to look at each piece of that data and flag things that don't look and make sense. It also goes back to the other point that being a market practitioner is really important. Understanding that data, what you're looking for, what it should show, is critical in doing this well.
Yeah, I think I go back to my original point about how important the accuracy and the management of the data is. The data librarian, is the one. If you put the book back in the wrong place, they know. So that function, that testing the function, knowing it's in the right place, the constant, the stock taking of it is a vital function.
We are out of time, but I've got a 10-second answer from both of you on a question. Frank, to you, how much attention to the Internet of Things should investors in this room pay? I know they should pay some attention, but how much?
I believe that the Internet of Things savvy, those who adopt it are going to be the companies that will be situationally aware for their future, and if they don't, that's a bad sign.
And Gary, for you, if we mine, and I accept you don't like that word, if we analyse 2% of the world's data, in 5 years' time, what will that percentage be?
I think it'll probably be even smaller, because the world of data is going up exponentially, and the opportunity set, I think, will increase.
All right. Please join me in thanking very much Frank and Gary.
Thank you.